Hi, my name is Fan Yang, your Chief Technical Strategist here at ForexMinute.com. You're watching today's Forex video briefing. It is Thursday, August 14, and we're in the middle of the US session. Today we got some soft GDP data out of the Euro area, but this did not seem to affect the Euro that much. US data was light, with jobless claims slightly higher than expected, but still giving us a decent print. Let's take a look at the Euro dollar, pound dollar, and the dollar yen charts. Here's a look at the euro dollar. It's in consolidation above 1.3333. The resistance is the August high here at 1.3444, but we are also seeing lower highs reflecting a descending triangle. Today we had a bullish attempt, which is holding below 1.34 excuse me, and below the 100 period SMA, simple moving average, in the 4-hour chart. The prevailing trend is strong, the bearish trend is strong, and the RSI has been holding below 60, which reflects maintenance of the bearish momentum. A very likely scenario will be that after coiling this week, the euro dollar will break below 1.3333 and push towards the 1.3295 to 1.33 lows. Looking at this daily chart, those lows from the November 2014. Let me just oh, there we go. Sorry about that. So there's still some downside risk, and the 4-hour chart shows you some bearish bias. At this point, a break above 1.3445, maybe above 1.3450, will be needed to introduce a bullish correction scenario, and preferably that would also break above this falling trend line if we are going to look for that bullish correction scenario. Pound dollar fell sharply yesterday after the UK jobs data and the Bank of England's quarterly inflation report. Essentially, we saw an earnings index contract in the second quarter, and then Mark Carney commented about a heightened concern regarding wage growth. While he did not say it, the Monetary Policy Committee might not be able to raise rates in 2014 based on these concerns, which we saw were reasonably based, at least on second quarter jobs data. At this point, the pound dollar is testing the 200-day simple moving average, looking at the daily chart. With oversold conditions in the daily chart, we can expect at least a near-term consolidation. But looking at the 4-hour chart, that near-term consolidation has upside that might be limited towards the 1.6770 area for now. And also this falling trend line that we see coming down from the 2014 high at 1.7191. So limited near-term consolidation upside, and a break above 1.6850, which is this week's high, would be needed to introduce some kind of bullish correction scenario. Otherwise, we might still have downside if we break below the 200-day moving average. We have downside towards this 1.6580 area, which represents a common low and previous resistance, so support resistance area around 1.6580 as the next support. The US dollar Japanese yen pair has been drifting higher this week after bouncing up from about 101.50 last week. Now, this market had a sharp retracement, but is still maintaining a bullish outlook in the 4-hour chart, now that price has returned above the 200, 100, and 50 period simple moving average in this time frame. I would like to see price dip and show that it can hold above 102. This would help me gain more confidence for the bullish outlook, which has 103 in sight, and then above that, the 103.75 to 104 highs from what is this, March and April in sight. And that wraps it up for today's Forex video briefing. Once again, I'm Fan Yang, your Chief Technical Strategist here at ForexMinute.com, wishing you safe and good trading.